Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. So, oh no, silver's down sharply today. I've already seen the commentary on the interwebs, comments on my videos, people messaging me on X. You can follow me over there at x.com/stacksmarter with the doom and gloom. Oh no, silver's selling off. And I mean, by the time I even managed to get on and do a live stream here, the price has already recovered significantly. But we got to talk about the technical setup and what triggered this temporary, relatively sharp dip, I guess, in the spot price of silver. If you look at this candle here, this is a 4-hour chart. You can see that we dropped as low as $90.29 just a little while ago here. It's about $3.40 right now. I think this drop was about an hour ago. Switch to a 1-hour chart. You can see it here. Yeah. Dropped down relatively sharply in a short period of time, but it's recovering. And, let me just say, I don't think there's anything to be worried about here just yet. But we need to put this into context and talk about why this fell and, what the factors are that's driving this. And we'll talk a bit about the technicals as well. I will say, if you want to pick up some silver on this dip, if you manage to pick up some silver down here around $90, good job. Congratulations. But if you want to pick some up, you can head over to sdbullion.com. That's where I buy my gold and silver channel sponsor. They still got junk silver at a pretty good price, but notably, the junk silver at SD Bullion is not available at spot price any longer. There is a small premium there, and this is kind of what I'm seeing across the board. Online dealers, some of them are out of 90%. Others have marked it up slightly. It was going for spot. It was like they couldn't get rid of the stuff fast enough for a little bit there. I think that's changing now as this plays out. So let's just talk briefly about what triggered this sell-off. It was, I see some people in the chat there saying it was the taco syndrome. Trump always chickens out. Maybe. I mean, I don't know. Maybe it's taco. Maybe it's 4D chess. Who cares? These headline-driven moves are just opportunities, I think, as far as stackers go. But this came following a speech that the president delivered at the World Economic Forum. Those lovely folks who want you to eat bugs and, rent your clothing, your wardrobe. He gave a speech there in which he basically backed off of the tariff threat regarding Greenland. He made a statement. It was a long speech. I watched some of it. And a lot of it was just kind of reiterating the same points about how great the U.S. economy is and all this stuff. And how bad windmills are. China sells windmills, but they don't use them themselves. This sort of stuff. But he said that he had a meeting with the NATO Secretary General Mark Rutte at the WEF. And he said, we formed a framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. This solution, if consummated, will be a great one for the United States of America and all NATO nations. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. So, was this 4D chess, or was it that Trump got a little concerned about the fallout of those threatened tariffs? I mean, who knows what's going on inside this guy's head, right? But the fact is that there was concerns about an escalating trade war, and it looks like those concerns are assuaged here. So it's interesting to see that silver had a correction here, and gold as well. Gold dipped briefly. You can see, although gold is still up 1% on the day, by the way. It just gave up some of its gains. And now, gold, by the way, what did it touch earlier today? $4,888. So almost at $4,900. Maybe we'll finish the day there. Who knows? It looks like the recovery is well on its way here. And same deal in silver. So, look, again, not much to worry about here. Although, again, it is interesting to note that perhaps some of the cause that we saw for silver to rise as high as 95 and change, so closer to $100 than to 90 there. It was like $4 and change away from $100. Maybe some of that had to do with the tensions regarding the tariff, the safe haven bid that hard assets get. We saw that action we covered in the last live stream regarding global debt markets. You can see the global bond yields here, at least here the U.S. 10-year, the U.S. 30-year, Japanese 10-year, Japanese 30-year are coming back down. Although they're not getting to the levels they were at previously, right? You can see that the Japanese 30-year bond, it's down 5.57% today, but it was up yesterday almost 9%. So some of that uncertainty in the global debt market perhaps has been assuaged for now. But the reality is that nothing has changed. So these headline-driven moves in the metals, like I mentioned, they're just buying opportunities from my point of view. I'm not telling anybody what to do, but I wouldn't be too worried about it. Although you do wonder, there was this headline from CNBC yesterday: Danish pension fund to sell $100 million in treasuries, citing poor U.S. government finances. And I mean, I would tend to agree with them. The finances in the U.S. not particularly good. Of course, Denmark is the country which currently owns and administers Greenland, so that might have had something to do with it as well. We were talking about how Europe collectively holds about $8 trillion worth of U.S. treasuries and equities, and that might somewhat play into this trade war, the potential effects of which Donald Trump might have decided he wanted to avoid, to sidestep that a little bit. Probably a smart move not to continue antagonizing the single largest collective holder of your treasuries, which you continue to sell more and more of at the Treasury. U.S. national debt still at $38.6 trillion, so nothing there has changed, right? Just because we're not going to get tariffs on Europe starting February 1st doesn't mean that this number isn't going to creep higher and higher and higher. So that's why I say nothing has changed. I think we're still on track to hit $100 silver here this year, certainly, maybe still this month. I mean, we're not that far away. We're at 92.30. We could certainly see $100 before the end of January. We'll have to see. You might recall this chart, which I shared on a recent live stream, but U.S. government interest payments hit a record $1.47 trillion in Q3 2025. So it's not just the debt that's growing, it's the cost to service that debt, right? Because bond yields do continue to creep higher, despite the fact that they're down slightly today. And this is the real reason that gold and silver need to be rising. It has nothing to do with Greenland, has nothing to do with Denmark or tariffs or any of that stuff. It has to do with the fact that we're facing a debt crisis. The only thing that Greenland may have had to do with that was that could have potentially been a pin that would pop the massive debt bubble, right? So they've managed to eliminate one pin. That's not going to be what blows this thing up, but something will, right? When you got a bubble, it just needs to find a pin. Eventually we're going to find one, and when we do, you're going to see the gold and silver prices skyrocketing. At least that's my forecast. Let's take a look at what's going on in China. So this is the most recent price data over at the Shanghai Gold Exchange for silver, which right now, let's see, 22,926 Chinese yuan per kilo. If you do the math here, that comes out to 3,297 US dollars for a kilo. If you break that down to troy ounces, about $102 and change, about 102.50. So the silver price over in China on the Shanghai Gold Exchange has been north of $100 for about a week now, a little over a week, I think. So we're going to follow. And noise from headlines here. Hopefully we get more corrections in silver. Let's enter positions at a lower price. When you see a sell-off like today's, which is just driven by a headline, you should just be saying, thank you, Donald Trump. Appreciate you saying that, driving the price of silver down so we can get our hands on some cheaper. I want to take a quick look at the chart here, though, and I've kind of updated this. We had a wedge drawn on this, you might recall, in the last update, but it's starting to look more and more like this is just an upward rising channel that silver is trending within. It's a bullish continuation pattern. This tends to lean bullish to neutral. It's actually a more bullish pattern than the wedge that I had previously drawn. And you'll notice, I've got these 2 points connected here via this trend line from January 16th, Friday, and January 12th. So that's how we get this trend line. And that's pretty much where the silver price stopped. So that trend line now has been tested 3 times. I think that's going to be the new support, right? Strong buying came in clearly because it only took about an hour to recover the silver price. So anytime we approach this line, I think you're going to see strong buying coming into the market. That in and of itself is a very bullish fact that there's a lot of money sitting on the sidelines hoping for a pullback here in silver after watching what silver's been doing. They want to get an entry, and when it dips, they're going to move in, and that means it's not going to dip that much. So the dips, as I've been saying throughout this bull market, they're going to be short-lived, and they might not be shallow. You could get sharp dips, but they're not going to last very long, and they'll be few and far between too. So look, the RSI here on the 4-hour, it's about 50. Looks like a good place to begin the next up leg. It's not, silver has worked off its overbought condition that it may have had here previously when it first touched over $93 here in January 14th. You had the RSI on the 4-hour here getting significantly over 70, but since that time, it's really worked off that overbought condition. And so I think what's happening is we are set up now for the next up leg. Is that going to be the one that takes us to 100? Maybe, maybe not. Maybe we get another breakout, maybe a bit of a consolidation, and then we take off to 100. There's no telling, right, in the short term. And yeah, I see some people in the chat laughing about the whole silver collapse thing. Yeah, it's such a collapse. Nothing to sweat here, right? Let's take a look at some of the other items on the menu here. So the gold to silver ratio. Let's turn off volume here. Getting a little bit of a bounce as gold is outperforming silver today amidst this correction. And I had mentioned that might be something we see in a recent live stream. It could very well be. We're looking at this on a daily chart here. You look at the RSI on the gold to silver ratio. Now that actually could potentially be a useful indicator, and it's down here around 20. It's very, very oversold, this gold to silver ratio, and you can use the RSI on a ratio. It's a kind of a derivative of a derivative, but that's okay. Shows us that maybe silver is going to cede its dominance to gold, at least in the short term. Maybe this chops sideways a bit. Maybe it rises a little bit, right? I mean, look at the correction that we've seen in the gold to silver ratio. It's absolutely plummeted. It's been cut in half in less than a year. So it makes sense that it takes a little breather here. But I don't think that means that silver is going to fall. I think what that means is that we are going to be set up for a big move in gold. Look at gold. I mean, the chart of gold is one of the most bullish charts I've seen in a while. It's breaking out of consolidation here. You still have a pending global debt crisis. You still have the Fed that's printing money. You still have central banks loading up on this stuff. The People's Bank of China, they just loaded up on gold for the 14th straight month. There's no sign of this stopping. So gold, which had been lagging silver considerably, it might just be its time to shine for a little bit, and that's fine. I like gold too. Got some gold miners, got some gold bullion. So, both metals are fine. I do think that we haven't seen the bottom for the gold to silver ratio, but it might correct here a little bit. Meaning, when it corrects, that means that gold outperforms silver, right? So maybe we're due for that for a little bit because silver has been on quite a run. But we'll get back to it. I do think that silver, once it breaks $100, it's going to be interesting, right? Because you might think that when silver reaches $100 that it's going to encounter some significant resistance, and that's certainly possible. But I think what that might mean, actually, when you see the transition to triple-digit silver, is that investors, especially retail investors, are going to stop waiting for that big pullback, right? They're going to really kick into hard FOMO mode once we get over 3 digits for the silver price. And that could actually mean that $100 is just the launch pad for a bigger move. And I've been talking recently about the $120 price target based on this chart, the M2 money supply to silver ratio. We can turn off the RSI for this one. And the reason being that level, about $120, that's where we're going to be at the previous 2011 low for this ratio. So that's more of like an accurate inflation-adjusted price target for silver rather than using the CPI, just looking at how much currency has been created since that previous price high. And to get to the same ratio that we had in 2011, we need $120. So I actually think that once the silver price gets through $100, it's going to be a short run to 120. And here, of course, this is the greatest chart of all, big cup and handle, which supports continued upward price movement in the silver price. And that is where I think we are headed. But again, nothing has changed. The U.S. is still racking up huge amounts of debt. Dollar debasement is still all but guaranteed moving forward. If you want to bet on one thing, the debasement of fiat currencies is a pretty solid bet, I think. And you can bet on that by having hard tangible assets like gold and silver. Not so much Bitcoin. What's Bitcoin been doing? Bitcoin down to $90,000, wiped out a lot of the gains that it had thus far this year. We had this recovery here where the Bitcoin price had gotten back up to about $98,000. Now, I don't hate Bitcoin. I've just always viewed it as more of a speculative asset and a lottery ticket than a hard asset that hedges you against dollar debasement. And, look at what's happening here with the price. It looks like that is, in fact, the case. So let me know what you think about this speech from Donald Trump. Let me know what you think about the correction today in silver. Do you view this as an ominous sign, or is this just a buying opportunity? I think you know where I stand. Thanks for watching, everybody. Stay safe and happy stacking. Do me a favor, follow me on X at x.com/stackedmartyr. Subscribe to this channel, and I will catch you next time.